Hello everyone, this is Karl Steinlage teaching you the #1 secret on how to master Medicare. If you're turning 65, retiring soon, this is the video for you. So what we're going to talk about today is the Medicare world. And a lot of times when you turn 65, you get inundated with information. You have companies calling you, you have mail out the wazoo, you have all these different plans. And what I'm going to try to do today is simplify that process and give you a high-level understanding of the Medicare program. So let's go. Medicare has two beginning components. And those are known as Part A and Part B of Medicare. Part A is free to you and covers hospitalization services. And Part B is premium-based, and that premium is determined by the government. For 2017, it's $134 a month. That can change every year in January, and it has, at least for the most part, no bearing on the insurance plan that you pick. So if you buy a different supplement from different insurers or a Medicare Advantage plan, that $134 is the same price. And on average, what Medicare is going to do is it's going to pay 80% for hospitalization and medical services. So if you go to a primary care doctor, you go in the hospital overnight, you show that red, white, and blue Medicare card, they pay about 80%. And that leaves a pretty big gap with the 20%. It leaves nothing for prescriptions because prescription coverage is not included in the Medicare A and B program, and it doesn't do anything for some extras like dental and vision and silver sneakers. So that's where all these extra plans that you get in the mail, your friends have, your parents have, they help supplement and fill some of these gaps left behind by Medicare. So they'll cover that 20% depending on the plan you pick. They'll cover your prescriptions. They'll help with dental and vision as well. And some plans will give you a benefit called Silver Sneakers, which is a free gym membership. So what we do at the Steinlage Agency is we work with all of the different carriers that offer you these plans, and we help figure out the right fit for your specific situation. Our services are actually provided to you at no cost. We receive compensation from the different insurance companies that operate in the greater St. Louis area. And the best thing of all is that these plans are the exact same price and benefit regardless of how you buy the plan. So that means that our assistance to you is at no cost. Not a bad deal. So all of these different plans fall into one of two distinct paths. And my advice to clients is to try to figure out or have at least some understanding of the pros and cons of each path and kind of make that decision not so much on what insurance company you want yet, but try to kind of narrow it down to which path you think is right for your situation. So the first path that we're going to talk about is supplementing original Medicare. So half of those plans that you see in the mail, online, are Medicare supplement plans. And these plans sit behind Medicare and just pay the balances left behind. So if you go to your doctor, you show that red, white, and blue Medicare card, you then buy a supplemental card or a supplemental plan, which are lettered policies A through N. And the government has standardized all these plans. Most people I find pick either Plan F, Plan G, or Plan N, because those give you the best blend of comprehensiveness and low premiums. In the greater St. Louis area, somebody can expect to pay about $130 a month for a Plan G, which would pick up the full 20% balance. So if you bought this supplement paying that premium, you would show your red, white, and blue Medicare card plus your secondary plan to any doctor, any hospital in the country, no referrals, no networks, no pre-authorizations, and you would walk out of there paying very little, if anything, out of pocket. Same thing for hospitalization, ambulance, MRIs, physical therapy, all that fun stuff nobody likes to think about. Also on this side, you would really need to add something called a standalone drug plan, because Medicare A and B don't cover prescriptions. Prescription coverage is actually administered by the federal government, so Medicare, or CMS, is kind of the referee They enforce the rules, they create the rules, but then they let these private companies, a lot of them are similar to who you've had through employer insurance, and they let these private companies figure out how to operate and make a buck within the Medicare space. And these plans are state specific. For 2017, in Missouri, the range on Medicare Part D on a low end is $17 a month, on a high end is $150. And how do you figure out which one of these plans, because there's 23 of them, as if there isn't enough to confuse you. There's 23 standalone drug plans, and all of those plans sign a 1-year contract with the government. So what we'll do for you now and on an annual basis at no charge to you is we will review your specific medications and help you figure out which one of these 23 plans is right for your situation. We'll look at your medications, your pharmacy, the premium the plans charge, whether or not they make you try other drugs first, and help you figure this out. We'll also work with you annually during the annual enrollment period, which is October 15th through December 7th, to see if there's any reason to change. And what you might do during that time frame is either change your standalone drug plan or decide to jump over into what's called Medicare Advantage, which is the other side. For my handwriting, please don't judge me. Medicare Advantage plans represent the other half of the plans that are filling up your mailbox. And what these plans are touting many times is low or no plan premiums. And they range based off of where you live, the insurers, whether it's an HMO or a PPO, but the concept is the same. So on this side, what you have is you have two people paying for your claim. You have original Medicare, which is that red, white, and blue card, and then the Medicare supplement plan that you're paying an extra premium for. So a $100 claim, $80 is paid here, $20 paid here, you walk out paying $0. What people really like about this side is the comprehensiveness, the ability to go anywhere you want, and when you first turn 65 or get onto Medicare Part B, you have a one-time opportunity to purchase a Medicare supplement plan without answering any health questions. So if you have pre-existings or you're worried about your health, you have a window to jump onto one of these plans and they can't ask you any health questions. What people don't like about this side is that you have to pay additional premiums, which can change, and many times Medicare supplement plans increase occasionally. The benefits can never change, but the rate can change. So what makes Medicare Advantage attractive to a lot of people is that you don't have to pay additional premiums. So how does it work? Well, what happens is the federal government, Medicare, looks at where you live, and it's all done by county, zip code, etc., where Medicare and a supplement are universal and accepted anywhere in the country. Medicare Advantage plans are a little more regional. So what happens is the government looks at where you live and they average the cost of Medicare, A and B. So example, in the greater St. Louis area, you have thousands of people on Medicare, people 65, 70, in nursing homes, people who never see doctors. Medicare averages all of that 80%, and they kind of know what they spend per year. And instead of paying your claim as it's incurred at 80-20 with the supplement, the government subsidizes the private carrier that you choose, and that's where they receive their compensation. So you still have Medicare, you still have to pay your Part A and your Part B premium, but you agree to get all of your Medicare benefits, including prescription drug coverage, through the private company. And that private company takes that money from Medicare, and a lot of them in our area will charge you no additional premiums. So what's the catch? Well, the catch is that underneath Medicare Advantage, you agree to follow the rules and stay within the network of the insurance company that you choose. So these plans look a lot like your employer plan. They might have $10 to $40 copays at doctors. You might have an ambulance fee or an emergency room fee. So instead of having 80-20 adding up to the 100% coverage, you have the private carrier paying in place of Medicare. So you still pay Medicare, the Part B premium. So your Part B premium comes out of your Social Security check, and if you're not drawing Social Security, then it's just billed to you. Instead of using the red, white, and blue Medicare card, you use the private insurance company's card. And you show that card to the doctor, and at a doctor, you might have a copay. You might still be responsible for the 20% charges for things like MRIs or chemo. You'll have a defined network, which is sometimes a turnoff for people if you travel or if you place a large premium or emphasis on openness and being able to see any provider that takes Medicare. That's one of the unique benefit that attracts a lot of people to the supplemental plans. So you have a defined network. Many times on the HMO plans, you'll need to designate a primary care doctor and get a referral. And then there's something else called pre-authorization, which is a scary long word, but basically pre-authorization means that the private insurance company, being primary, might have the opportunity to pre-approve or require you or your doctor to go through a pre-approval process for certain services. And each plan is different. So as far as a high-level overview, a Medicare Advantage plan might charge you no additional premium because the government is subsidizing that plan, but then instead of having the 80-20, you pay copays as you go. You pay 20% charges for MRIs, for chemotherapy, for hospitalizations. And most of these plans, in fact all of them, will put a maximum exposure financially between $3,000 and $6,700 per year. So if you do get really sick, this one might be more expensive than this side. And that's kind of the risk reward, is that in a normal or a great year, you might pay as little as $0 or maybe $100 if you have 3 or 4 office visits and some lab work. But if you get really sick, the Medicare Advantage plan may be more expensive than what the annualized premiums are on the supplement and the drug plan. So a lot of people like the stability of knowing what they're going to pay, whether they use it or not, or if they have a bad year. Other people might be turned off by these premiums and be more comfortable paying as they go, knowing that if they do have a bad year, they might end up owing more in that year. If you decide that Medicare Advantage is right for you, there are 18, in 2017 at least, there are 18 Medicare Advantage plans that a person can purchase in St. Louis and St. Charles County. Our agency sells all 18 Medicare Advantage plans. So we can work with you to try to find which plan has your doctors in network, your preferred hospitals, cover your prescriptions for the lowest possible cost, because Medicare Part D is typically included in Medicare Advantage. You do not have to pay for the majority of these plans an additional premium to purchase prescription drug coverage. It's included in the plan. If you decide to start with Medicare Advantage, there's no underwriting, meaning you don't have to answer any health questions because the plans are subsidized by the government. But if you decide during that annual enrollment period that Medicare Advantage is no longer right for you, and you decide you want to jump paths back to this way, then you have to wait. And to purchase a Medicare supplement plan, your age and your health determine whether or not you're insurable and what price per month you pay. And that sometimes turns some people off to Medicare Advantage. They think, well, if I'm healthy now and I get sick and I have to spend $3, $4, $5,000 out of pocket, and that's a chronic condition, I might not be able to jump back over here later on in life. In conclusion, Medicare really is boiled down to 2 distinct paths. And I find looking at this from a bird's eye view really helps people grasp the differences and the pros and cons between the two distinct paths. And what our agency will do for you is we will help figure out which one of these makes the most sense for your situation, which one you're most comfortable with, and then we'll work with you year in and year out to make sure that you're not overpaying or on an incorrect plan for your situation. Again, our expenses are paid directly by the insurance companies, so our help is at no cost to you. And being an independent agency, we work for you.